want to invest in cryptocurrency, you don't know where to start. Maybe you have some experience and knowledge in stocks investment, but still you don't know how may the cryptocurrency differ from any financial instrument. In this video, we will explain to you what types of analysis you should do when you are investing in any financial instrument, and what special analysis you should conduct when it comes to cryptocurrencies. First, let's have a brief on what is a cryptocurrency and what is a blockchain. A cryptocurrency is a digital or virtual form of currency that uses cryptography for security. It's decentralized and operates on a technology called blockchain. Cryptocurrencies enable secure and direct peer-to-peer transactions without the need of intermediates like banks. They are typically based on decentralized networks such as blockchain, which ensures transparency, immutability, and security of transactions. Blockchain is a distributed ledger technology that serves as the underlying foundation for cryptocurrencies. It's a decentralized and transparent system that records and verifies transactions across multiple computers or nodes in a network. In simple terms, a blockchain can be seen as a chain of blocks where each block contains a list of transactions. These blocks are linked together, forming a tamper-resistant record of all transactions. Blockchain relies on consensus mechanisms to validate and add new blocks to the chain, ensuring the integrity and immutability of the data stored within it. Beyond cryptocurrencies, blockchain technology has the potential to be applied in various industries for secure and transparent record keeping, supply chain management, smart contracts, and more. For simplifying, imagine that you are traveling with a group of your friends. One friend is responsible for all the bills. When you are billing any food, any transportation, any cost regarding this traveling trip, he's the one in control, and he has a paper where he writes all the transactions. That guy represents the centralized bank. On the other hand, if we are using the blockchain or the other technology of decentralization, that means that each one of the traveling group has his own paper, recording a copy of all the transactions or the bills that has happened or has been posted during the trip. Now, let's jump to the analysis types. There are two main analysis types when it comes to cryptocurrency and any financial instrument. First, it's the technical analysis, looking at past price movements in an attempt to determine which way the market is likely to move next. The analysis is used to find the buy and sell signals. Second type is the fundamental analysis. It's the analysis that is based on the information available about a coin or a stock with the aim to determine its real intrinsic price. I had the same question marks when I heard about the analysis types, so let's have an example. The Confused Coconut Company has offered 30% shares of their capital in the market with 30 stocks. So 30 stocks and 30%, that means that each stock represents 1% of the actual capital. So they offered that in the market with a price of $20,000. So now you are conducting your fundamental analysis. You go check the financial statements of the Confused Coconut Company and you look at their projects in the market, looking at their budget and their actual profits, anything that is published about them that indicates their actual capital. So after looking at these projects and the financial statements, you figured out that the actual capital of this company is equal to $1 million. That means that 30% of this $1 million is $300,000. That is distributed on the same 30% means that the fundamental price, the real price of that stock is $30,000, but its market price is $20,000. That means this stock is undervalued. Now you have been introduced to the terms of undervalued and overvalued. Investors get to compare the fundamental value to the current market value of the coin to check if it's undervalued or overvalued. You try to go invest in the undervalued stocks or coins because it has higher chance to get a higher price in the market later. In the cryptocurrency, you can apply the fundamental price by looking at the white papers of the coins. The white papers, maybe it's similar to the financial statements of any institution, and also looking at their technology, the technology built by that team, evaluating the technical aspects of that cryptocurrency. Since the confused coconut has just started offering their shares for the first time this month, we cannot perform technical analysis. The technical analysis, by its nature, looks at the financial instruments with buy and sell activities of at least 1 year ago. So, through the historical movements, we predict the buy and sell signals. What we have discussed, the two types of analysis can be applied on any financial instrument. So, what is unique about the cryptocurrencies? What that unique analysis? The cryptocurrencies have a unique third type of analysis that is called on-a-chain analysis. It gives you a public access to the real-time health of a financial system, which is the blockchain itself or the network itself that has the distributed nodes, where transaction data and crypto wallet balances are used to determine market sentiment. It checks the strengths of a network, evaluating matrices like active addresses, transactional volume, supply distribution, and total value logged. All the previous examples assess the long-term health of a network, evaluate a cryptocurrency price, sees who is buying and who is selling. Transactional volume is considered one of the most important predictors of its future performance in the cryptocurrency market. The supply distribution shows the percentage of coins held in addresses categorized by size. Crypto whales tend to affect the market regardless of whether they are holding or trading. The total value of cryptocurrency logged or stored in a decentralized financial application or a smart contract. So, what are the metrics to evaluate the short to mid-term market action? First, realized profits and losses, which measures the dollar value of bitcoins that are being sold at either a profit or loss. Supply in profits and loss. This is the second item. Shows the number of coins currently in profit or loss compared to their last purchase price, where a healthy market will have more coins in profit than in loss. Third, realized capitalization. It's a way of evaluating cryptocurrencies by adding together the most recent purchase price of every token, say Bitcoin in supply. If the realized cap is greater than the market cap, then the overall market is sitting in profit. Now, finally, we need to discuss that there are many tools showing analytics and dashboards for the previously mentioned metrics like Glassnode and Dune Analytics. Now, my friend, you need a summary about everything we talked about. So, briefly, you go to a trading platform like Coinbase or Binance, create an account, and register your wallet. First, you look at the available coins. First, try to pick coins that existed for a year or more to be able to conduct technical analysis and look at the buy and sell signals. Second, you look at these coins' white papers and investigate their technology power, utilization, and projects to conduct the fundamental analysis. Third, you look at these coins on-chain variables insights like transactional volume, number of active addresses, and supply distribution to conduct your on-chain analysis. Finally, the list of coins will be filtered to the most promising coins for investment, either on short term or on long term. Take the decision and always remember to diversify your investment between your best candidates of financial instruments. Finally, have a nice trading.